Hello guys, and I'm hoping this podcast episode will be smoother than the last one because the last one is more of a free talk with no notes at all. This time I have some notes with me on what to talk about, so those long silences won't happen again. Hopefully, my talking will be smoother. And also, I decided that I'm just going to call this podcast the Daily Talk, just like before, because it sounds better than the Johnson Finance podcast. So consider this like a reboot of the Daily Talk, but hopefully this time I am more committed to it, and hopefully I could find ways to provide value to you guys. So with that said, hello and thank you for tuning in on this episode of the Daily Talk, where we are going to discuss FOMO with options and Bitcoin for beginners. But before we get into that, I want to give a quick update for today. The banks have passed the Federal Reserve stress test, which they always do, mainly because the test is too easy to pass. Therefore, the banks are now initiating massive stock buybacks once again, completely forgetting about their past mistakes, okay? The bubble has been reinflated and it is going to get much bigger once again, okay? Only to bring on inflation until it inevitably becomes worthless if a stagflation scenario happens, okay? And by the way, these stress tests don't even test for a stagflation scenario, because if they did, the banks would fail immediately and miserably. Keynesianism is not designed for stagflation, which interest rates are low, inflation is high, and then unemployment is high, which makes productivity low. That is what a stagflation scenario is, okay? Keynesianism has no answer for that, and this COVID crisis may bring us a stagflation scenario with the shutdown of the majority of America's small businesses. So I guess we would have to wait and see in the future, and I may make a future episode with the focus of stagflation and exactly what it is and what that means for America. But let's get into today's topic, which is FOMO with options and Bitcoin. So for those of you who don't know, FOMO basically means the fear of missing out. This is a term that is especially relevant in times of bubbles, or as what a Keynesian would say, times of rapid expansion. The reason why I want to talk about this is because of Bitcoin. Once again, Bitcoin is moving up massively in price, where the first bump up, which was about 2 months ago, was because of some investors starting to realize that the Federal Reserve is going to be printing infinite money, so people are starting to hedge into different speculative assets. Bitcoin is one of them, so they continued to rise, and then Bitcoin once again got onto the mainstream media, and the mainstream media put a spotlight on it, and now this is where all the FOMO comes in. People see the price accelerating upwards, and they get interested in making a quick buck. Usually FOMO is one of the last aspects you would see in a bubble when massive amounts of retail investors come in. And if you don't know what retail investors are, it's people like you and I. We are not institutional investors. We don't have a massive hedge fund backing us. We don't have a massive bank. We are individual investors, and that's what a retail investor is. So basically, the retail investors come in, giving the asset a final push-up, which is usually a very big push-up. And what many people don't think about, though, is that there can only be so many buyers interested. Eventually, there will be a person who is the last one to buy, known as the bag holder, and then the selling begins. There's no way the price can infinitely go up on an asset that is only accepted by so few, okay? Eventually, this will blow up in flames, just like how it did the last time. While it is true that the Federal Reserve is going to put this economy through massive inflation and potentially stagflation, the Bitcoin will more than likely become worthless just because it is accepted by so few. If a stagflation scenario happens, and let's say Bitcoin goes to the price everyone thinks it is, like $300,000 a coin, would a farmer be willing you to sell his crop for Bitcoin? It is very unlikely, especially with how volatile the currency is. Because of this volatility, many retail businesses won't be willing to take or accept the coin because it is so volatile. It basically has no store of value. However, many people would accept gold. This is because gold has a proven store of value to be used against inflation with over a 100-year-long track record. Bitcoin is just far too volatile to ever be a realistic currency. Now, I'm not trying to say that cryptocurrency is dead. There would be another cryptocurrency that can come onto the playing field that does have a stable store of value and people will be willing to use. Bitcoin, however, is not going to be the answer. Anyway, many people are buying onto this hype again because of their fear of missing out. And then eventually the last buyer will be found at the top, and then the price will completely collapse in on itself. The final stages of the bubble is the FOMO, because the FOMO will suck up any potential last buyers, so then the sellers can come in and start dumping their asset. Just like in 99 when everyone was buying a .com, just like in 08 when everyone started taking real estate courses, and just like in 2020 when notable celebrities and Twitch streamers, for example, like Pokimane, sent out a tweet asking about stocks, and when the Wall Street Bets subreddit hit an all-time high of members. All of this was just FOMO, and it's basically a sign that a top will soon come and that the bubble will find the needle and it will be popped. For 2020, the needle to the bubble was basically the COVID crisis. So for the current state of things, I don't recommend beginners who are finding this video to buy Bitcoin. It is overvalued and at all-time highs, right? You don't buy high and then sell high. You're supposed to buy low and then sell high. Many people are buying into Bitcoin at this all-time high, will end up buying high and selling low, just like in the past couple of years. So please do not buy into this hype, and please do not listen to everyone saying that Bitcoin is going to 300,000, even if the mainstream media considers them to be experts. Many retail investors who buy into this FOMO are going off of emotion and do not consider the potential consequences in the future. Do not be one of those people. This will bring us to our next topic, which is options trading. Options is basically where you buy and sell contracts that has an underlying asset, which is usually stocks, but can also be commodities as well. Basically, each contract is worth 100 shares of a company, which is why you see so many people on Wall Street Bets gambling with options contracts, because it could be a very quick way of making money. But it could also be a quick way of losing money as well. It's high risk and high reward. It's basically gambling. Now, I don't want to bash on options trading, because I do it too, but I want to warn people who are just starting to get into it. I want you to go in and take the risk, but please, and I encourage you, but please do not dump your entire portfolio into an options trade. I don't care what it is. I don't care if you're buying a call or a put, and I don't care if you're going to try and theta gang it with credit spreads. It will eventually blow up in your face, and you could only win so many times in a row. I want you to take the risk, but don't be stupid about it. Only do like one contract at a time. Do one credit spread play at a time, even one debit spread play at a time, one iron condor at a time. Don't dump your entire portfolio or the entire collateral that you have into an options trade, because it will not work out for you and it will not be pretty, okay? I have a side hustle where I work as a personal finance consultant, and I've met multiple people who are absolutely loaded with debt and have little savings. And they always, well, not always, but there are a couple of them where they actually told me that they want to dump their entire account, whatever cash that they have left, into options trading because they see the massive gains on Wall Street Bets. And they only want me to teach them about options and not the actual fundamentals of personal finance. And that kind of pisses me off, but basically options trading is no different than buying a lottery ticket. Especially if you don't know what you're doing. It's basically a trap designed and made out of false hope that only keeps poor people poor. And if these people end up throwing their entire account into options and lose it all, then they're going to be in an even deeper mess than they are before, which is one consequence that they're clearly not thinking about. basically, what poor people must do is to save money and invest money, not spend it or spend it on consumption. When you're gambling on options, you're basically spending that money for that glimmer of hope, not to actually invest for your future. What they should be doing is keeping expenses low as possible, and increase assets while decreasing liabilities. Assets are basically things that put money into your pocket, like a dividend from a stock, and liabilities are things that take money out of your pocket, like a mortgage payment or a car payment. But when you do get that money that you're willing to use in options trading, make sure that it's money that you're willing to lose, because it's very likely to happen, especially if you do the risky options trades that are high risk, high reward. Anyway, guys, I got to cut it early today, so I'm going to wrap up this podcast earlier than usual. I hope that each one can last longer than 15 minutes. It looks like we're only going to be about 11 minutes in on this one, but hopefully you guys got some kind of value out of this. Thank you for listening, and if you have any ideas or suggestions, please leave a comment below, and I'll also like it if you were to subscribe. And if you really do find a lot of value out of these podcasts, these quick ones, then please hit the bell button below, and thank you for listening.